It's 5 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. The global bond rout deepens. The sell-off in long-dated notes in particular across the world, from treasuries to JGBs, seeing no sign of relief today. Dodging a bullet, Google avoids a sale of its Chrome business in the latest court ruling. And don't miss our exclusive interview with Petrobras CEO Magda Chambriard later this hour. But let's take a look at these markets because they were a little bit troublesome yesterday and troubling, particularly yields. Japan's 30-year yield up another 7 basis points today. So clearly no huge relief in sight, at least for Japan. Not quite as bad for the United States. Is it contagion? Is it just more troubling signs for the bond market and its vigilantes? I do want to point out that we saw 4.9997 on the 30-year today, so we haven't yet bypassed 5%, but we are very, very close, up another 2 basis points. And the 10-year yield, as you can see, up another 2.5 basis points along with it. So the whole curve is experiencing this anxiety, and is perhaps getting to be more than anxiety. We'll see throughout the day. Let's move to futures and see what's happening. We are in the green. Don't forget, towards the end of the session yesterday, we did recover to a certain extent. But if you look at gold, there is another corner of the universe where you can see that anxiety up another 0.2%. That's 7 straight sessions of gains now for gold, up 5% in those 7 sessions. All right, let's get to some stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start from maybe the reason why we're seeing those NASDAQ futures rebound. We have Google shares rising 5.5%. This antitrust case that was overhanging Google has now come clear that they will not force the forced selling of their Chrome search browser business. They will have to share some of their Google search data, though, but it was really that the selling of their Chrome business that worried investors. And so now that we have that kind of clarity, we're seeing shares of Alphabet up 5.5%. It is also helping shares of Apple. Yet another reason why we're seeing tech stocks rebound today. Shares of Apple up near 3% in the pre-market. They have a very lucrative agreement with Google's search browser, and this new antitrust ruling does remove some of the negative impetus for negative overhang, should I say, for this stock moving forward. Well, looking ahead to the open, we do have some more earnings to keep an eye on. Macy's is another retailer set to report. The shares are up near 2% already in pre-market trade. Looks like it's looking good for their release today. We're expected to see some more detail on how the company is dealing with tariffs and perhaps give us another gauge on how the consumer is doing in the U.S. Bonnie.
Valerie, thank you so much for all of that. And in just moments, we're going to get a closer look at this bond market action with Max Kettner of HSBC. Kennon of Clear Harbour joins us later this hour on the stock market and more. So back to our top story now. Yields on long-dated bonds across the world continue to edge up. Let's get more with Bloomberg's cross-asset strategist, Ven Ram. So Ven, as you put it in one of your blog posts this morning, it might be a slightly less bruising day for global bond markets, but no fundamental relief in sight, particularly, it would seem, in Japan.
Morning, Moni. Absolutely. I think that, we have seen the selling abate a bit, but I think the longer-term questions for investors remains. How is Chancellor Rachel Reeves going to fund plug the fiscal gap? I mean, it's a yawning gap. And today we got news that maybe the autumn budget is going to be postponed to November. That is raising some very serious questions about the profligacy of the UK government, because the autumn budget usually comes around in October, and if they have got to buy more time, that kind of suggests that they're having a hard time fixing the finances, and that is kind of that has left traders asking some very uncomfortable questions about how she's going to manage either cut spending, which is deeply unpopular within her own party, or put up taxes. And that, of course, is not a very popular option as well, given that she already raised taxes earlier. So all in all, the bond market vigilantes are asking some very uncomfortable questions, and that is showing up on yields.
Certainly a lot of contagion and also anxiety in the various countries themselves. Ven, thank you so much. That is Ven Ram of MLive. So the rout in long-dated bonds may be set for a second day, as we've been saying. Take a look at the 30-year yield over the last year in Britain, which is your blue line, Japan, the yellow line, and the United States. Still up there, and it is the white line, so perhaps the least lousiest move, but still pretty lousy. Is this contagion or each country's bond vigilantes on the march? Joining us now is Max Kettner, Chief Multi-Asset Strategist at HSBC. How do you read this move, Max? Is it contagion or something else?
No, I don't think it's contagion. I think it is incidentally really in global bond markets sort of several idiosyncratic factors that are meeting at the same time. We look at JGBs, we look at Japan, obviously they've got a bit of a funding gap as well. When we look at Japan, we know that obviously finances are not in a particularly great state with debt to GDP. But in Japan also, we know that underlying inflation pressures are in fact really going the wrong direction. So they're really both the front end and the long end probably still have a little bit further to go. That's very Japan specific. In the UK as well, it's very UK specific. The twin deficit issue in the UK plus the budget situation in the UK. And in treasuries, and particularly the long end of the treasuries, obviously what we've seen and what we are still seeing is this speculation that has been really with us since late July around that, this question and the speculation around the end of independence of the Fed, which I don't really necessarily buy into at all. But again, that's sort of those idiosyncratic factors that all come together. I don't think it's necessarily contagion and therefore, you know, there's only one way up. That, I think, is perhaps people making it a little bit too systemic of an issue than it actually really is in reality.
So that might actually be a silver lining to this whole event, if you want to call it an event. Does that mean that this will all show up in flows, however, that people will start maybe eschewing some nations' bonds, you know, for the relative safety of other nations, which would be to the benefit, it looks like, of the United States?
Yeah, I don't think so. I think, look, I don't think people are massively going to flock into US Treasuries now, because that either would be really only happening if we did see really some significant deterioration in the data. That's number one. Or if we saw some proper risk off. But you've just said it in the intro as well. You know, we started yesterday with some pretty heavy degrossing across all sectors. And by the end of the trading session, there's already been some buying again. And obviously today, things look a lot rosier already when we look at equity futures. So look, I don't think that's necessarily something that is going to benefit US Treasuries from a flow perspective, particularly because the data, when we look at the data in the US, I do think that what people are really not paying close enough attention to is that when we look at the high-frequency activity data in the US, that's actually been picking up since the end of June. So for all the talk of reversal of front-loading and big slowdown in US activity and indeed global activity in the second half that we've seen from consensus, I think there is really a chance actually that people are a little bit too bearish on the growth side, and that both consumption data, also some high-frequency data, even on the labor market, have actually started to trend a little bit more, shown a little bit more improvement. All of that is really a bit overlooked. So that, I think, is really playing against a sort of flow argument against treasuries. It's more arguing for treasuries to still be mispriced, particularly those sort of 5.5 cuts that are in the price by December next year. That really is too much. That should be probably closer to something like 2.5 to 3 before that gets a little bit more attractive again.
That's putting an awful lot of pressure on this Friday's non-farm payrolls report, though, Max. What if we get a weak number or an unemployment rate that rises?
Yeah, but look, I think when we look at the payrolls this week, for example, I think the consensus is around about 75,000 last time I checked. So already the consensus number is very low. Of course, that is partly a function of break-even payrolls, actually that number being really low as well, given that immigration flows have gone so much in reverse since the start of the year. So I would argue, look, if we get, instead of a 75K, if we get like a 50, 40 or 60K number, so what, right? That's still better than zero. And actually, look at the last 3 months, you know, we had 35,000 on average payroll gains, and the unemployment rate was virtually unchanged. So that does suggest that perhaps the break-even payroll number already is below 50,000. So even if we get a miss on the payroll number, it's I've got a really hard time to see the unemployment rate suddenly going up another 10, 15 basis points. For that to happen, that might actually need a negative payroll number, not a miss on the payroll number, but a negative one, given how low the break-even number is.
Well, we'll definitely see Friday. Now, you are so constructive on risk assets that you actually really like consumer companies here and also high-yield bonds in the United States. Explain to us why there isn't just a little bit of trepidation with that view.
Yeah, look, I think one of the defining features, really, of this rally since Liberation Day has been pretty subdued sentiment and positioning. I think when we look particularly on our measures of long-only, so long-only investor positioning, that still is only around about neutral on high-yield credit. In equities, they've been more overweight up until March, April. They've been clawing, long-only investors have been clawing back some of those overweight positions, but we're only around about halfway there. So there is still a lot of room to go, I think, from a positioning perspective, from a broader risk asset perspective. On high yield credit, the technicals are very, very strong in our view. You look at the maturity wall is very low, refinancing needs are very low, index quality, average index quality of high yield credit is much better compared to the last 10, 15 years. So all of that really puts high yield credit, when you put it in an asset allocation perspective, in a really, really comfortable spot. And in particular, when you look from a total return perspective, if indeed my view is wrong and the high frequency data are sending a wrong signal, then of course the front end has a lot of room to rally. The front end can price a lot of additional rate cuts in, and that of course should cushion any kind of spread widening that we might be seeing if indeed the high frequency data turn around for the worst once again. So that leaves high yield credit in a really good spot. And also you were alluding to some of the more consumer names in equities, so some of the more economically sensitive sectors in industries. That really is also due to the fact of course, those high frequency data picking up. If that now starts showing up in some of the, let's call it top tier, tier one data, yes, that is not really priced into the broader market. It also really argues for a bit of a broadening of the equity market as a whole.
Max, always a pleasure speaking with you. Thank you so much for your time today. That is Max Kettner of HSBC. Now to other top stories trending on the terminal this morning. Chancellor of the Exchequer Rachel Reeves will release the UK's annual budget on November 26th. The autumn budget is widely seen as a defining occasion for Prime Minister Starmer and Reeves, following a series of unpopular spending cuts and subsequent reversals. In the latest court filings in the US Tuesday, Fed Governor Lisa Cook's lawyer blasted President Trump's move to oust her as nothing more than, quote, cut and paste allegations of mortgage fraud. Cook is seeking emergency rulings to allow her to keep her job, but the latest filings indicate there'll likely be a ruling before the end of the week. Apple's lead AI researcher for robotics has left to join Meta. Separately, 3 more AI researchers are leaving Apple's in-house large language models team. According to sources, Apple is now discussing internally whether to rely more on outside technology rather than homegrown models. Coming up, President Trump accuses Chinese President Xi of conspiring against the US with Putin and Kim. More next. This is Bloomberg.
We're going to be going to the Supreme Court, we think, tomorrow, because we need an early decision. We're going to ask for an expedited ruling.
President Trump hopeful an expedited Supreme Court ruling will overturn an appeals court finding that his global tariffs are illegal. I'm joined now by Bloomberg's Suzanne Lynch. So, Suzanne, what exactly are the next legal steps regarding these global tariffs?
Well, as we heard there, Donald Trump is planning to appeal this to the Supreme Court, and that could happen as early as today. So we're expecting some developments on that. I mean, I think what this means is more uncertainty. Obviously, the rest of the world, all of the United States' main trading partners, have been thrown into disarray over the last 6 to 8 months since the re-election and reappointment of Donald Trump as US president because of this newly protectionist stance by the United States. And we have seen various levels of tariffs slapped on all of practically the United States trading partners. So I think the concern now is among the markets, among exporters really, is Are we going to get clarity on this? Now, I think in one sense, uncertainty has been priced in. There has been a lot of flip-flopping on a lot of these policies by the Trump administration, Trump threatening huge tariffs, then bringing them back down and changing his mind quite quickly. So I think the market is quite used to that uncertainty. At the same time, I think people and exporters here in Europe and across the world want to know what are the final terms of this trade agreement. We've seen at various points over the last few months companies and exporters holding back or trying to get their exports in before a certain date to try and kind of beat the calendar, as it were. So I think it does inject another level of uncertainty that we saw on the markets last Friday when this announcement by the court was first announced.
And moving to another building in Washington, the Wall Street Journal has reported, as we know, that Treasury Secretary Scott Bessent is kicking off Fed chair interviews this Friday. What more do we know, have we gleaned over the last several weeks and months, Suzanne?
Yes, I mean, this is also a very big moment, and it's something that I think investors and the rest of the world are looking at closely, the issue of Fed independence and its centrality, obviously, to the US economy and, of course, to the rest of the world, the global economy. The Wall Street Journal is reporting that the Treasury Secretary will begin those interviews this Friday. We're looking at around 11 names. Some of them, as we see there, people like Michelle Bowman, the current federal governor, Kevin Hassett, a long-term advisor to Donald Trump, the National Economic Council Director. So these are the kind of names that are out there. But this is crucially important. I think there has been a lot of uncertainty over the last few weeks, obviously in connection with Governor Cook. And we've just heard there earlier that she has launched or lodged more legal documents about this case she's taking against Donald Trump for trying to remove her. So look, very significant moment. Who gets this position and who is going to be at the top of the Fed when Donald Trump, and it will be Trump ultimately, who will make that decision.
As Scott Bessent keeps telling us. Suzanne, thank you so much. That is Suzanne Lynch there. Meanwhile, over in Beijing, China has made a show of its growing firepower and clout at its once-in-a-decade military parade. Take a listen to President Xi Jinping speaking earlier.
The Chinese nation is the great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
President Trump, watching from Washington, went to Truth Social to wish President Xi to give his, quote, warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America. Quite the truth. For more, we're joined by Bloomberg's Min Lo in Beijing. So, Min, Trump's accused Xi of conspiracy. What has Xi said about the U.S.?
Well, President Xi didn't mention the U.S. at all in his speech. And look, President Xi's speech is likely drafted way beforehand. He's unlikely to change it to respond to Trump's tweet earlier this morning. But Trump did ask on the tweet post, on the X post, whether or not China is going to mention the role of the U.S. for the amount of blood that has been shed by U.S. Veterans in supporting China to win over the Japanese during World War II. And President Xi, in his speech, of course, he thanked the Chinese veterans for their sacrifices, but he made a nod to foreign countries for their aid. He didn't name drop the U.S. though. He didn't say anything about that conspiracy, but I guess what is unsaid, it doesn't really need to be said, right? Because you have the images, President Putin, Kim Jong-un flanking President Xi, not to mention you also have all the other, some of the most sanctioned countries present as well. There is the leader of Iran, of Myanmar as well, Pakistan, many of these countries, at least 20 world leaders gathered in Beijing to watch the military parade. And it's a show of force for Beijing because they showcase some of their latest cutting-edge military technology and hardware. There are amphibious vehicles as well. And if you watch the Chinese state media CGTN commentator, when that amphibious vehicle rolled past, the commentator was talking about how that would be critical for the takedown of any coastal territory. And what's unsaid is, of course, Taiwan, part of China's plan to reunify with the territory at some point by force if necessary.
Yes, and indeed, accusing the three of conspiracy was really quite the post on Truth Social. He didn't elaborate, by the way, that's all he said, and he just left it there. Min Min, thank you so much. We have to leave it there. That is Min Min Lo in Beijing. Coming up, a sigh of relief for Google. More on a major court ruling and a look at what else is making headlines in your front page news. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Wall Street Journal, Google dodges the worst penalties in its antitrust case. A federal judge has barred the tech giant from exclusivity deals, but is not forcing the sale of Chrome. This judge's order follows his ruling last year that Google illegally monopolized the search market for more than a decade. Next up on the New York Times, a federal appeals court has blocked President Trump from using an 18th century wartime law to deport a group of Venezuelans. The Trump administration had said the migrants are members of a violent gang and were part of a so-called invasion of the U.S. In a 2-1 ruling, the court said that it found no, quote, invasion or predatory incursion by a foreign power. And on the Washington Post, D.C. Mayor Muriel Bowser ordered indefinite coordination between the city and federal law enforcement officials. Bowser said her order will, quote, provide the pathway forward beyond the presidential emergency. President Trump's federalization of the D.C. police force lasts 30 days and is set to expire next week. Her announcement may subdue any showdown after the deadline. Coming up, more on the global bond rout with Aaron Kennon of Clear Harbor next. This as U.S. equity index futures point higher. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The global bond rout deepens. The sell-off in long-dated notes across the world, from treasuries to JGBs, sees no signs of relief. Dodging a bullet, Google avoids a forced sale of its Chrome business in the latest court ruling. And don't miss our exclusive interview with Petrobras CEO Magda Chambriard later this hour. Let's take a look at markets now, because we're seeing it particularly in Japan, with those 30-year yields up another 7 basis points today. Sure, we're seeing it in the US as well, but we're up just another 2 and a bit basis points on the 30-year yield. Same for the 10-year yield. Now, we did get almost to 5% earlier in the session. 4.9997 to be precise. So we haven't fully crossed that 5% on the 30-year yield. Maybe not panic, but certainly a lot of anxiety. Let's switch it up and show what we're looking at in terms of futures, because it's a much more positive session today than it was yesterday. And don't forget, towards the end of the session, we saw some dip buyers coming in. S&P futures there pointing to a gain of more than 0.4% as we hit the second trading day in September. And NASDAQ 100 futures look to be rebounding quite substantially. I will point to gold, though, up to almost 3,540 today. A 7th session of gains so far. That's more than 5% of gains for the precious metal in the last 7 sessions. Now let's get to some stocks to watch. Over in London is Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Alphabet. These shares are rising 5.4% in pre-market trade after that antitrust ruling showed that they will not be forced to sell off their Chrome browser business. They will be forced, though, to share some of its search data from its Google search engine. So it's not all out of the woods, but it was all of that news on Chrome that really has led the rally this morning. And it's also helping shares of Apple. Apple has a lucrative agreement with Google's Chrome. Those shares in pre-market are up near 3% for Apple. There is some speculation by analysts that also this ruling about Chrome will help Apple deepen its ties with Google, and that can help it catch up to the AI race if it integrates some of these Gemini AI features into Apple products. Lastly, let's look ahead. We do have some earnings crossing the tape before the bell. Macy's, a big retailer, one of the last retailers to report earnings. Shares of those of Macy's are up 1.9% in the pre-market market. We are looking for any hints on how this company is dealing with the fallout from tariffs and any gauge on how the U.S. consumer activity is holding up. Vonnie.
Valerie, thank you so much. That's Valerie Teitel there in London. Back to our top story. 30-year Treasury yields inching closer to 5%. That's as global bonds face renewed pressure with concerns around inflation and the fiscal environment in many, many countries, including the United States. Joining us now is Kennon, CEO and co-founder of Clear Harbor Asset Management. And if you just saw the chart that we showed there, it's the difference between the 10-year and the 30-year right now. And we're really seeing it in the longer dated bonds and their yields, Erin, and I'm curious what you make of that, given that, you know, there was a lot of bond buying out the curve for safety for several months there.
Yeah, thanks, Vonnie. You know, I think clearly the Japan story is really leading the way, and it should. If you look at the 30-year JGB, it's up over 100 basis points year to date. That compares to only about 20 basis points in the United States. And if you look at Germany, it's something like 80 basis points. And Japan, of course, is going through a reflationary period, the likes we haven't seen in decades. And so even if you look at their nominal rates, the 10-year JGB is trading at like 1.6%, and the 30-year is trading at like 3.28, I think, this morning. And so still, you know, hasn't played catch up to the developed markets. I would also just say, too, from a supply perspective, you look at outstanding supply in Japan, about 75% of outstanding JGB supply is coming outside of the 10-year part of the curve, so longer dated issuance. Whereas in the United States, it's less than 25% outside of that 10-year segment of the market. And so I think there's that important dynamic to keep in mind. And of course, if you look at interest rates in the United States, in the front end of the curve, we're down about 60 basis points year to date in 2 years, and we're down about 33 basis points in the 10-year part of the curve. And that's very different than Japan, which is up 30 basis points in the 2-year part of the curve and something like 55 basis points in the 10-year part of the curve. So very different dynamics.
So what would you suggest to your investors at this point? I mean, if you've been in treasuries and you have your portfolio picked out and your tenors picked out and so on, do you just stick with what you have, or do you make any adjustments?
Well, we manage money for individuals, families, not-for-profits, and smaller institutions here at Clear Harbor. And we really think of the fixed income asset class as ballast to other asset classes that we're allocating to. And so for us here in the United States, that means owning sovereign debt still makes sense, because if the economy were to slow down, we still think that there is a historical sort of correlation. That is to say that interest rates will trend lower as equities trend lower, particularly inside of, let's say, the 30-year part of the curve, which has its own sort of technical dynamics that we just discussed. And so that's important. We also think about, you know, where are credit spreads right now? Both home and abroad, they're historically very tight. And so high yield is also highly correlated to the equity market. So even if high yield spreads were to widen a little bit, we wouldn't necessarily want to be extending into high yield significantly when you think about a multi-asset class strategy that we may be running for a given family. So we really stick to our knitting. We're focusing on, you know, treasuries, mortgage-backed securities, and then investment-grade credit. And we're keeping our investment-grade credit on the shorter end, and we're keeping our treasuries, you know, closer to the Bloomberg aggregate.
Sure. So yesterday wouldn't give you the heebie-jeebies, even if we see something unusual out of the non-farm payrolls report, or indeed the September 17th FOMC decision?
Well, I mean, I think from a central bank perspective, we think the Fed is poised to probably move in September, perhaps one more time after that this year. And I think there are about 5 total cuts, or maybe up to 6, between now and December of 2026. So, you know, that's going to probably continue to steepen the curve. But the front of the curve, if you look at 2 years, you know, trading at 365 this morning, that's, you know, well below the Fed funds rate of 4.5% right now. So the market's already signaling to us that we expect some rate cuts here in the near future.
Erin, I want to ask you about equities because, again, we saw dip buyers emerging even yesterday, even after we saw, you know, a 1.5% drop at the worst for some of the indices, and we're pointing towards gains today. I mean, when should we get really worried about buying equities, particularly the Mag 7?
Well, we're not much for thinking about, you know, what's going to happen today and next week in the equity market. But as you probably know, September is a seasonably weak period for the equity market. And so there's a little bit of caution there. People coming back from their summer breaks, they're starting to think about rebalancing, tax loss harvesting. So there's some understanding as to maybe historically why that's the case. But also, valuations are not particularly cheap, at least for the segments of the equity market that are driving the rally on a year-to-date basis. That is to say, mega caps and the S&P 500 here in the U.S. trading at 22 times forward earnings. That's like top decile historically. But the small cap segment of the market is still quite cheap. And if we start to see lower interest rates, we start to see some of that reshoring of economic activity, which hasn't really occurred due to the tariff policy. In fact, we had a weak ISM manufacturing data yesterday. But if we start to see some of that, maybe we see some broadening in the market as we move into year end and into 2026 here in the U.S. In Europe, we continue to think there are some interesting tailwinds as the European economy embraces the idea of deficit spending, remilitarizing the continent and what it means for infrastructure, industrials, even the banking sector, utilities. We still think there's probably some room to run in Europe. And of course, we're still constructive on Japan.
You know, we keep talking about breadth and how, you know, every now and then it seems to widen out and everyone gets a little bit relieved that we're not just counting on the Mag 7 and so on. But you point out that the other 493 stocks are equally, well, maybe not equally, but they are also richly valued and maybe too richly valued here.
Yeah, that's right. I mean, I think if you look at where they're trading at like 20 times that sort of 493 stocks outside the Mag 7, 20 times forward is expensive. But if you equal weight the 493 names outside of the Mag 7, it trades at about 17 times multiple, 16 and a half times. That's not particularly expensive. So what that signals to us is that there are opportunities to allocate capital within the equity market at a reasonable price beyond these mega cap names, which have driven performance over the last couple of years.
Aaron, thank you so much. Going to be another interesting day in markets here in the US. That is Aaron Kennon of Clear Harbor Asset Management. Now to other top stories trending on the terminal this morning. In the latest court filings Tuesday, Fed Governor Lisa Cook's lawyer blasted President Trump's move to oust her as nothing more than, quote, cut and paste allegations of mortgage fraud. Cook is seeking an emergency ruling allowing her to keep her job, but the latest filings indicate there likely won't be a ruling before the end of the week. President Trump took aim at President Xi Jinping as the Chinese leader hosted foreign leaders at a major military parade. Trump accused him of conspiring against the U.S. with Russia's Vladimir Putin and North Korean President Kim Jong-un without elaborating. China's foreign ministry didn't immediately reply to a request for comment. FedEx has launched a new regional hub in Riyadh and secured a Saudi economic license to operate as a foreign air carrier. The move marks FedEx's deepening bet on the kingdom as a rising logistics power in the Middle East. Coming up, the dust settles on America's biggest antitrust case in decades. More on what it means for Google, Alphabet, and big tech. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Google has avoided a forced sale of its internet browser Chrome business in the latest ruling by a DC judge on the biggest U.S. antitrust case in decades. The company will, however, need to share online search data with its rivals. For more, I'm joined by Bloomberg Tech Europe anchor Tom McKenzie. So it doesn't have to sell Chrome. All of those that were coming out to try and buy Chrome will be a little bit disappointed, Tom. But what does it need to do instead to satisfy the enforcers?
Yeah, look, Vonnie, to your point, there will be those who will be disappointed that Chrome is no longer on the market, but the upside is clearly going to come through for Android, the parent company of Google, of course, but also Apple as well, and I'll get to that shortly. The analysts, and you can see that in the pricing pre-market as well, are taking this as a win for Alphabet and Apple. And here's why. Chrome, they do not have to spin that off. Yes, they have to share some search data with some of their competitors, so maybe some upside there for the likes of Microsoft, OpenAI, Perplexity, as well, but not all the data, just certain search data that they'll have to share. They are not allowed under this order to strike exclusive agreements with partners like Apple, but they can still make those payments. Apple has been receiving about $20 billion per year for hosting Chrome and other Google search products on their iPhones, largely. $20 billion a year, that is significant. That's why Apple is gaining as well pre-market, because there's a clear win for Apple. Those payments can continue even if the exclusivity has been eroded by this order. So those are the winners broadly. And what Dan Ives from Wedbush has been saying as he's looked at this is that this clears a path for Apple and for Alphabet going forward, particularly when we think about these two companies integrating more closely. Apple has, of course, struggled in terms of building out its own AI proposition, and increasingly Apple is looking at partners, external partners, and notably Google and its Gemini model to integrate that into Apple hardware going forward. So the take from some is it clears that path forward to greater integration. The near-term upside is coming through from the fact that Chrome is not going to be spun off, and they're going to continue to make these payments to Apple, and they'll have to share some data. But the worst judgments, the most feared judgments for Alphabet have not come through from this ruling, from this order.
So a little boon for Apple, as you say, which might help because in another department it's suffering, right? Bloomberg reporting that another researcher has swapped Apple for Meta. What are those details, Tom?
Yeah, this is a key researcher from the robotics division at Apple, and Apple is putting a lot of its future bets in terms of robotics. So this is significant for Apple that, to your point, has already lost about 10 members of its foundation model team. They've really struggled to hold on to that talent. A lot of that talent has gone to Meta, but also to OpenAI. This latest member, the key researcher from the robotics arm of Apple, going to Meta. And Meta, we've seen Meta signing checks, hundreds of millions of dollars. In one case, $200 million, in fact, for Apple's lead overseeing their foundation models. This is another member of the Apple team moving to Meta. Meta, by the way, has also faced its own challenges when it comes to talent. They've seen a number of the people that they've recently hired just in the last few weeks actually leave Meta, according to reporting from Wired. So the talent wars continue, and the adjustments around where this headcount goes continues. But it's a reminder that Apple is really at the cutting edge of facing that challenge, really at the pointy end of the spear when it comes to the challenge of maintaining that talent and building out their own AI models, which is why, and it comes back, it's so important that they'll be able to build on that relationship with Google and Gemini.
Amazing, Tom. Thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. And do tune into the next episode of Bloomberg Tech Europe. That's on September 12th. Turning to other kinds of retail now, the last leg of earnings on deck with Macy's, Campbell's and Dollar Tree all set to report before the market open. For more, let's bring in Bloomberg Global Business reporter Jennifer Creary. Jennifer, let's focus in on Macy's first. What are investors looking for in the results, given that tariffs have been around for a little while now?
Yeah, so I think there are three things that investors will be looking at. So the first is whether or not there's been any improvement in consumption from that US middle income consumer. Now, the key figure that we're looking at is comparable store sales. Now, analysts estimate that will fall 0.5%, certainly an improvement from the previous quarter, but still some challenges ahead to improve that demand. Secondly, whether there's been any change to that sales guidance. So in the previous set of results, Macy's estimated that will stay at 21.4 billion USD. So, but of course, a lot of these retailers, they don't have a lot of near-term visibility because of those US tariff changes. So it's making it harder for companies to project forward. So let's see if there's any change in that. And lastly, tariffs, of course, whether that's squeezing Macy's margins even further. Management said in the previous set of results that they'll have to include very targeted price increases. Surgical was the term that they used. So let's see if we get any more color on that.
All right, Jennifer, thank you so much. We have to leave it there. We will get those results, though, before the opening bell. And as you can see, Macy's shares higher in the pre-market along with the rest of the market. Thanks to Global Business reporter Jennifer Creary. Now to a Bloomberg exclusive. Bloomberg's Annmarie Hordern spoke with Petrobras CEO Magda Chambriard on the standing with the US trade war between Petrobras and the country. Take a listen.
In the case of Petrobras, we export very little to the United States. So even if we were reached by this 50%, our export would be easily directed. We have India, China, Asia, they all demand a lot our products, so it wouldn't be very difficult to remanage. But we export to the United States. We like these exports, and we buy a lot of things from the United States as well. And we're going to continue doing it.
When you look at the global landscape, the president has also put high tariffs on India, trying to pressure them to stop buying crude from Russia. Could that be an opportunity for more Petrobras exports?
Sim, nós exportamos a Índia, por exemplo.
Well, India, for example, it introduces itself into Petrobras as a procurer of any product that we want to export there, as a buyer. You know, so we usually say, no, the Indians say you are increasing your oil production, your production of derivatives, and anything that you want to export more, we will buy. You know, Asia as a whole also buys from us. We export, for example, a bunker with 24% of renewables to Asia. And every ship, every vessel that we send to Asia sells a lot, you know, with high percentages. And so we keep looking at that and looking at this industry that is going to continue being relevant for the next 2-3 decades. This is what we believe. So, and at the same time, we need to ensure that energy transition needs to take place in Brazil, and that we need to be part of that. And we need to deliver.
Oil products were exempt from a lot of these tariffs, but have you seen an impact on the supply chain? Have costs gone up? Have projects been delayed?
Supply chain tem sido uma questão, sim.
Supply chain has been an issue. For example, we had goods that are not shelf goods, and these goods need to be requested in advance in several of our projects, and we have seen some delays in delivery. So, for example, things that we expected to ensure 2 years for delivery times are reaching like 3 years. So this impacts some of our products as well. But I think that Petrobras needs to anticipate with itself with regard to these demands, you know, so that we can be more and more agile for the market.
And that was Petrobras CEO Magda Chambriard speaking to Bloomberg's Annmarie Hordern in an exclusive interview from the Bloomberg New Voices Forum in Sao Paulo. Coming up, more earnings on deck and the Fed's Beige Book will get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Earnings before the bell from Macy's. Also Dollar Tree and Campbell's will give us a good reading on the consumer. Then the first of 3 days of jobs numbers with the JOLTS jobs data. We also get factory and durable goods orders out at 10 a.m. Eastern. And we'll get the latest Fed Beige Book. That's at 2 p.m. Eastern time for a look at what's happening regionally. Now to some micro movers. Alphabet shares on the rise. The search giant avoiding a forced sale of its Chrome business in the latest court ruling. Apple shares up also on the same news as it benefits their relationship with Google. And Tesla bouncing back in the pre-market after CEO Elon Musk said 80% of its value will come from its Optimus robot. It has to be said that in the pre-market, we are seeing futures move higher in general. Let's get to oil, though, because we're hearing reports now that OPEC Plus, which is meeting at the weekend, may actually increase supply again. Oil is rolled over, and you can see Brent crude down 1.6%, NY crude down 1.8%. Gold, though, continuing. It's a 7-day streak now, up 5% and continues to rise. Let's take a quick look at the global bond market. We are seeing those long end yields rise considerably once more, particularly in Japan, but also we're obviously seeing it in the United States as well, though not as much as earlier, up just more than a basis point. That's it for Bloomberg Brief. Surveillance is going to continue the conversation right ahead. Do stay with us. This is Bloomberg.